Hello guys, Scalping Pro here again. So we closed our earlier positions and then we went in again to take more advantage of the downside, the expected downside, as we discussed in the earlier video. As you can see, price formed a double top and it has almost completed. It's the same trade. We went out and then went back in. So once again, as I keep saying, you have to be patient with the market to be able to understand what the market is doing. You have to have market knowledge. Most people tend to get into the market without much trying to measure the double bottom move, see where it's expected to close there. So roughly it should close somewhere around here. That's what we're expecting. I mean, it might not happen today, but as you can see, we are still managing our positions. The earlier positions were closed last 2 weeks. Once the account was doubled, we decided just to close the positions and then wait for the month close, which is somewhere I think on Tuesday or Monday, and then we expect price to rally before the further drop. In fact, onto the higher time frame, as you can see, price is forming a sort of a demand level, but I am expecting it to break through and then go further down for this zone somewhere in the course of next year. This is what I'm expecting anyway. This is my outlook. You can do your own research, but this is on my outlook. I take my positions and I patiently wait. So as you can see, quick one here. Notice how monthly price movement has engulfed the previous month between the open and the close of the previous month. I mean, it's not a classic bearish engulfing, but it's one of a form, and it's a kind of confirmation that I'm expecting price to break through the blue line, which is the monthly lows over there. But it's going to be tough. I mean, seeing how price has been rejected on several occasions anytime it gets to that level. But with the current happenings, the new COVID variant, also inflationary issues across Europe and then the UK, I'm expecting price to do as I'm expecting it to. So I mean, for a quick one, you see the US bond yields are rising after shocking US inflation reports, and the difference between the US bond interest rates and the bond relative to the negative interest rates on the European bonds will force the European investors to sell their euros and buy US dollars to buy the US bonds. What this means is that there's going to be some capital flights from across Europe into the US, because currently, as you know, based on the tapering, bonds will be cheaper in the US, and then given that bonds in Europe have moved. Yes. So as I was saying, bonds in Europe are currently have dropped, which means that the values have gone up. I mean, there's a inverse relationship between bond price and its yield. So when they say bonds have moved up, it means that the prices are falling. I mean, so for the US, you see that due to tapering, yields have dropped, and therefore it makes them cheaper. And as you know, you buy low and then you sell high. So expectedly in Europe, bond yields have also dropped, especially for the 10-year bonds. Yeah, so you expect them to be on the high. So for investors who had bought earlier would be in the money by now. So selling off will be to take their profits and then add that to the capital they have, sell their euros for dollars, and then go into the US markets to take advantage of the currently cheaper, relatively cheaper, 10-year bonds due to the rise in the yields. This is going to cause a further sell-off in the euro as expected anyway, but let's see how it goes anyway. All right. Have a nice weekend.